This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is the second day of the Top Step eBell. I'm doing a 50K account. And today I was able to bring myself out of drawdown and recover from the drawdown that I incurred yesterday. Now, before I took a winning trade today, I actually went in drawdown one trade. So the first trade that I took today was a losing trade. But if we look at all the losses, we can see that they're staying consistent because I know, based on my data, my trade statistics, I should not be risking over 16 handles ever. All my winning trades, the max drawdown that they occurred, 90% of them incur a drawdown of 16 handles. If we look at the statistics from my mirror board, we can see that that is true. I did a drawdown analysis to come up with the risk management plan for this eval. And the average MAE was 5.95 points. The maximum MAE was 19.5 points. And the 90th percentile was 12.5 points. So the typical heat on winning trades is 6 points. 90% of winners stayed within 12.5 points of heat, and the most heat on a winning trade was 19.5. So if 90% of my winning trades stayed within 12.5 points of drawdown before it was a winning trade, then I should not be risking over 16 handles on a winning trade ever. There's only one trade that I took where it was over 16 handles. So 16 handles is the sweet spot for me. And you can see that my losses have been pretty consistent with that. This one was only 15 handles. This one was 15 and a quarter. And the first trade that I took today was 15 and 3/4. So I'm keeping my risk parameters within or underneath that 16-point threshold. My risk is pretty well managed. So I'm able to take one trade that's only a 2.7 R, and I'm able to make back all those losses and get myself out of that drawdown, basically, and come back to break even on the account. The balance is at $49,974, so I'm only down about $25. The realized P&L for today is $160.56, but it should have been a lot more than that, and I'm going to get into it. So let's get into it. Let me move myself out of the way, view my day. Today's the 27th of August, 2025. And how I felt today, I was pretty confident in a bullish bias based on what the market has done in the weekly range so far and the market criteria that was setting up. So I feel like I definitely should have sized up today, but because I went into drawdown on the first day of trading the account, I wanted to keep my risk size, or my contract sizing, the same because I didn't want to come today, take another 2 losing trades, but then size up as well. That would dig myself into a deep hole. So I kept myself at the same contract sizing, 3 contracts, 3 micros, and I was able to get myself out of that drawdown. So maybe tomorrow, now that since I'm around break even, if tomorrow's an A+ day, then I'll definitely be going in with 5 micros. But today I just wanted to get out of that drawdown and work out of it. And I think today was more of an A day, so I also came up with this risk management, and this is part of the risk management plan for the eval. An A day rating is a day where I would dynamically size up. A B day rating is where I would use my default position sizing, which would be 5 micros. I traded 3 micros yesterday because I was not confident in the market approach or the bias. And then a C day rating would be 3 micros where I'm scaling down. So today was another day where I was scaled down just because I didn't want to dig myself into a deeper hole of drawdown. Although I was definitely confident in the market going higher today. And that would fit under the criteria of an A day, because an A day it's one-sided and I'm completely confident in one idea. But coming in today, I had a little bit of low focus and low energy, so I wasn't really locked in. So I felt pretty confident in the bullish bias, but I felt low focus, low energy, and then as the market kept trading lower pre-market, I was no longer confident in my bullish bias as the market appears heavy pre-market, but I realized that based on the market profile, this is literally just making the Judah swing on the daily range. So I asked myself, what is the draw on liquidity? And I'm noting that as Friday daily high. What is my bias? Higher time frame narrative. Tuesday has traded down below Monday low and settled on its high, respecting the daily buy-side imbalance, sell-side inefficiency. The development of the weekly range is bullish, so I'm expecting Wednesday to trade down into Tuesday's range and then trade higher. Market criteria. It looks like range play. This is what I dub the market criteria that's set up today, where we had an overnight range, then price made an impulse swing lower from that pre-market range, make the Judah swing on the daily range, and then how's it going to get to the draw on liquidity? Based on how candles close in the 1 hour and at the 1 hour buy-side imbalance, sell-side inefficiency, I'm expecting a dry below the 8 o'clock low to fail. I'd like to see price open low on the day, drop away from the discount gap opening, make a new low a day, then reverse. Pre-market low could be in depending on how the 9 o'clock 15-minute candle closes. This did not happen. So I'm only looking to be a buyer today. I'm looking for my bullish discount gap opening setup. Where the market has a discount gap opening, I'm looking for the market to fill that gap based on higher time frame narrative, market criteria, where the market opens at 9:30, and how liquidity is presented in the overnight session. So if you read everything here, everything that I have here is what the market did today. It was perfect. It was good, and I was able to catch that move. So this is a good trading day for me. If I can do this consistently, there's no way that I cannot profit in the long term. So let's see. We had an overnight range, then price made an impulse swing lower from that pre-market, making the Judas swing on the daily range. And this is what happened today. If we go to the chart, let's go to a 15-minute chart. We can see that we had an overnight range, right? And then pre-market, this is at 8:15 this morning. Market leaves that range lower, but leaves the buy side above that range intact, right? So gives it a reason to come back up there, making the Judas swing on the daily range. And it does that. So my approach was spot on. I'm going to read my annotations here. Okay. The close on last week's candle leaves a large discount wick, which is bullish. Okay, this is from the weekly. Tuesday traded below Monday low into the daily bias and balance saw some efficiency and settled on its high. This is bullish. I'd like to see Wednesday trade down into Tuesday's range, then work for Friday high. On the 4 hour, I'm annotating this gap. I'm noting that the market could potentially reverse there. But look at these down candles. This is what I did not annotate. These down candles should support the market if we're bullish. I'm noting on the 2 o'clock candle dropped into that little gap right there, but it closed above it. So I'd like to see Wednesday trade down with it or into Tuesday's range, then work for Friday daily high. Just carrying the higher time frame narrative down to each time frame and lining up the time frames. So the point of interest that I'm noting here is the 4 hour on the hourly gap. That's actually not where the market reversed. It reversed at this down candle right here. I'm annotating equilibrium of Tuesday's range because in order for the market to trade higher, I want to see it drop down first, offer a discount of the previous day range, and then go for Friday daily high. And on the 15-minute, finally, we can see all the annotations here. Anything annotated in light blue is what I'm noting as the draw on liquidity. Anything annotated in this light yellow is market criteria. So we had an overnight range, and then pre-market retraction drops down. We're opening at the low of day, so I'm anticipating a gap fill. So if we go to the chart and see, that is what came to fruition today. I wasn't able to capitalize on it as much as I would have liked because of a simple mistake that I made. So let's get into it. Well, first of all, I want to point out how this is literally something that repeats over and over and over again. So you know how I noted the market criteria as range play. This is what I used to call it. Now I'm calling it like a more technical term because I want it to sound advanced and make myself feel cool. But when I say range play, I basically mean overnight range manipulation, right? Where we have a range in the overnight session, and then pre-market we see market retraction one direction, rebalance previous day range, and then trade higher, clear the overnight range buy side. In this case, I thought the market should at least trade to Friday daily high because of how the weekly range is developing. We have Monday closes in the opposite direction of the weekly draw on liquidity. That's perfect. Tuesday drops down, takes Monday's low, drops into the daily discount rate, settled on its high. That's perfect. So with this information, I'm anticipating Wednesday to be bullish. If Wednesday is going to be bullish, it can at least trade up into Friday daily high. And that's why I note that as the draw on liquidity in the pre-market session. What's the draw? Friday daily high. So if we go back to my optimal intraday swing model study system V2, let's apply a filter where market criteria is overnight range manipulation. Okay. I'm going to look through these examples, and you're going to see it's quite literally the same thing that sets up. So it's not going to be exact, but it's going to be similar. And this is basically how I trade. It's extremely based on higher time frame narrative and market criteria and where the market opens at 9:30. And if we have a gap opening, I'm basically pairing the logic of the higher time frame narrative and market criteria to give you an idea of how the market's going to trade around the gap opening. So if we have an overnight range, we have market retraction that drops and takes the low of the overnight range, and trades into a discount of the previous daily range, opens at the low of day, trades down into this discount array. Then I'm anticipating the market trade up and take Friday daily high in this case. This example, but you can see it's the similar things that just repeat. Like, is this not literally what happened today? The exact same thing. So this is the study that I've been working on, and this is really, really, really allowing me to get in touch with higher time frame narrative and market criteria, putting those two pieces together and coming up with a market approach. I don't even call it bias anymore. I call it market approach. This is how I approach the market. This is what I'm looking for. But this is quite literally the same thing that happened today. Just the Judas swing on the daily range didn't happen until 9:30. But you can see how it sets up the same, right? This is quite literally the same thing. Wait, this is today. That makes sense, right? But you see what I'm getting at. So you note how these daily profiles have similar characteristics, and that's basically what I'm trading off of. Like that. The same thing that repeats. So there you have it. Back to the chart. Explain the executions that I took today. Now the first trade that I took was actually a loss. And because the market opened at the low day and at that hourly order block that I annotated in the pre-market session, I was annotating this as a point of interest for the market to trade down into a discount rate and reverse. Usually when the market opens at the low day or at the high day, I can anticipate the move to come very fast into the open. Sometimes it happens in the first 10 minutes of market open. Now in this case, the entry is way too early and the market never gave me any valid confirmation to get long. But what happened was we open, we trade down. This candle closed near its high, and I liked how the following candle opened and traded down, and then closed near its high, and I enter in at the market right there. So let's pull up the recording. Now I know that I have a strong tendency to execute early in the market. If you keep it up with my channel, you know that this is true, and you know that this leads to quite a bit of losing trades. This tendency to execute very fast into the open when the market sets up high on the day or the lower day is a form of self-sabotage that I keep repeating simply because my best trades have come in the first 10 minutes of market open. I have one playbook that's really fucking good. It's so good. And it happens very quickly into the open like this. So you got to be on it and you got to be ready to catch it. But in this case, the market never even gave me any confirmation to take the trade on the 5-minute, so it was never even valid. We can see, if I speed this up, what am I doing here? I think I'm getting ready to execute because I liked how, okay, so here I'm entering it at the market. I entered it at the market because I liked how this candle opened, traded down, and then closed up. I thought this was going to happen this reverse was going to happen right at the low day. I've seen it happen before. It's in my data. It repeats. But was it ever valid on the 5-minute? Let's look at the 5-minute. Let's see, where's the 930 candle? So here's the 930 candle, right? Never gets over the opening price of that. So not necessarily ever valid. And this was taken before this 5-minute candle even closed. So I didn't even wait for there to be 5-minute confirmation. I didn't even wait for the overlap of this down candle. I just went in at the market because I thought it was going to happen right there at 930. So this is a loss that I could have prevented. Knowing that I do have a strong tendency to execute fast into the market open. I've written that down at one of the forms of self-sabotage that I consistently repeat, right? Actually, I haven't. Oh, here we go. Strong tendency to execute early in the open. This one hurts. There we go. So that's the mistake that I made today. But the only reason I was able to get a winning trade today was because I corrected the mistake that I've been making over the past few weeks, and the mistake that I literally made yesterday, where I stop out on the same idea twice in under 5 minutes. So if you go to yesterday's trades, let's go to yesterday's trades. Look at the time. 950, 952. So boom, just like that, in 2 minutes, I literally have wrecked myself. That doesn't make any sense. I went back and looked at all my winning days. All the winning days that I've had 2 trades, where I've taken 2 trades, there's been a space of at least 5 minutes from the time that I took the loss and the time that I took the second trade that ended up being a winning trade. There was a space of at least 5 minutes. What does that tell me? I need to take a step back, recoup myself, think about what the market is showing me, think about if this idea is correct or not. Maybe I mistimed the market. Maybe I made a small mistake. I don't know. But it's never a good idea for me to just immediately go back in there and immediately put risk back on. Because most of the time, I think that I just made a small mistake in either my stop loss or the location of the trade. Let's say I'm buying the market. I may stop out on that idea really fast and I think, oh, you know what? I think this just did not play out because I bought the market in a premium. I bought it way too high. But now that it's dropped down a bit, I'm going to try it again in under 5 minutes. And then I stop out on the idea twice fast. Or I think it's just because my stop was a little bit too tight. In this case, I almost went back into the market because I thought my stop was a bit too tight. If we look at the recording, you can see where my stop was, right? Now, there was nothing for me to frame this trade off of. I'm not executing on any discounted rate at all. There was no 5-minute confirmation. It's way too early. Now, I didn't even know where to frame my stop in this case. I just put it underneath the consequent encroachment of this wick because there was nowhere for me to put this stop loss. It didn't make any sense. So I stopped out on this trade very, very fast. So I do know that when I stop out on trades very fast, it tells me that I usually got the idea incorrect. So now I'm just sitting back and I'm watching. Now what actually able to allow me to put space between the trades that I took today was a shift in the mindset that I had. So let's see, put space between trades. I applied the lesson I learned from yesterday's mistake, which prevents me from wrecking myself twice fast. Instead, I kept the mindset that I'm going to sit back and relax until it's so obvious to me. Then I will trade again. I was in no rush to get back in and try the idea again because of a small mistake I made on the loss. I perfectly executed the correction necessary to prevent this mistake I've been making over this week at last. There you go. Okay. Now let's talk about the winning trade that I had. So the winning trade was executed when the market traded down. I noted how it reacted to equilibrium of Tuesday's range, and then we had displacement back inside the range like this. Boom, on this large up candle. This large candle comes in. I'm watching this up candle because if the market is still bearish and still trading lower, this up candle should reject the market, right? It should respect the mean threshold. It should respect the midpoint of this up close candle because it should act as a bearish order block. You can see that was respecting the midpoint of it right here, but this only went down below this low, closed back above it, and now we have displacement back inside the range that is laying a body over the midpoint of that up close candle. This tells me that something has changed. So at this point, on the close of that candle, I'm placing my buy limit order on that down candle because it's also a 5-minute order block. If I go to the chart, it's also a 5-minute order block, so the open price at 9.45 right there. It's also a 5-minute order block, so I set my buy limit order there. I set my stop loss just below the midpoint of this up candle, which is 15 handles. I risked over a little over 15 handles on this trade because I know that all my winning trades I should not be risking over 16 points. Only in rare cases will it ever go over 16. Will I ever incur over 16 handles of drawdown before that trade turns into a winning trade? That's the max amount of heat I can anticipate on a winning trade. So I take that as a buy limit order there. I get filled. And remember, if we go back to the mirror board, I'm following my protocol. My targeting protocols, my risk management protocols, I'm following everything. So, partial profit taking protocol. When I'm trading 3 micros, 2/3 of that position is coming off at a low hanging fruit objective. And 1/3, I'm allowing 1/3 of the position to be a runner to go for the full swing, meaning the full amount that I think the market's going to trade to for the day, which in this case would be Friday daily high. So 2/3 of the position is going to come off there. And it does. Speed this up. Boom, boom, boom. And then here is where I made a crucial mistake where I gave back a lot of profit. But at the same time, if I literally just set this trade and forgot about it, I didn't want to close top step because I didn't know that if I closed top step, would it close my positions and take me out of the market? I would have just completely set and forget about this trade. As soon as this take profit delivers, as soon as the low hanging fruit comes off, the stop goes to break even, and I should just close out, just close the tab, not even look at it, and go do whatever it is that I'm gonna do for the rest of the day. But because I sat on the charts and micromanaged this trade, I ended up trailing my stop. The market came back and took that out before it delivered the level I was looking for. So I was looking for 23,650. Let me scrub through this. So I don't think I have it in here. So I was looking for 23,650, right? Now eventually, I'm sitting here micromanaging the trade, and it's a multiple hour swing. So why am I gonna sit here and look at a fucking 1-minute chart and micromanage this trade? It doesn't make any sense. But I noted how we had a double purge here. The market took this low, boom, traded up. This was nasty. I was watching this in real time because I noted that this order flow looked extremely bullish, and I know that people were buying this right here to try to get onside with the move once it went below that low, and then they took it down there with the spike of a wick, knocked out anybody who was a part of this move, and I thought at this point it should definitely just run for Friday daily high, and it should not take out that low. So I trailed my stop to this low, Made a new high of day, barely tapped the high of day, and then it just started running. Now, I thought the market was just going to rebalance to this gap right here before it went up into Friday daily high, but it just rolled right through it. Why did it do that? Because it was just rebalancing the range. All it did was rebalance to a discount of that range before it delivered the draw and liquidity that I was looking for. So instead of me securing, let's see, 125 handles on the trade, I micromanaged the position for 2.5 hours. 2.5 hours I sat here and watched this thing on a 1 minute chart. I wasn't watching it the entire time. If you saw from the recording, I was kind of journaling the session and logging my data and everything, right? But I was peeping at it every, 5 minutes. Maybe even less than that. I'm trying to get back to the chart. Where is it? There it is. So I'm trailing myself to this low. It comes back, takes me out for break even. And this was so frustrating. It pissed me off so much to sit here for 2.5 hours, have the market come 19 points shy of the level that I was looking for, and then knock me out for the remainder of the position right there. And I got so pissed at this. Look at this journal entry. This is crazy. How it feels to wait fucking hours only to have the market not deliver my draw on liquidity and knock out my trailed stop is extremely enraging, especially when I could have locked in more profit had I not moved my take profit to a higher level. Having the market not give me the level I'm looking for, then come back and stop me out is the most fucking frustrating thing ever. I do not handle this well at all. Another exit botch, looking for more, looking for the market to deliver exactly what I'm looking for, demanding market give me exactly what I want. Fucking pathetic. This has me extremely frustrated. I was pissed. I was really pissed. I even know there's no reason for the market to go higher, but still hold on to the trade, leading myself down the road of hope again. So let's go back to the chart. Now, had I just set this and forgot about it, it would have played out. Literally. Like, just move the stop to break even and fuck off. That's it. And I would have came back hours later. Oh, look, take profit hit, as I was looking for. But when you sit here and micromanage the trade, then you make this adjustment and that adjustment and do this and do that and that and this and like it doesn't make sense to sit here and watch this. Like, I've already locked in equity on the trade. I don't care if it goes to break even. Just have confidence that the market's going to deliver at the level that I'm looking for, and that's what I'm trying to build right now. But another thing is my original take profit for the runner was going to be at 23,604, which that would have delivered in. See, I got tagged in on this candle, right? I would have been done with this trade, 83 handles on that runner in 27 minutes. But I saw I was moving with a lot of strength right here. What does that make me do? Boost my take profit up to Friday daily highs. Because I'm thinking about my pre-market plan. And I'm like, in my pre-market plan, I say the draw on liquidity is Friday daily high. And if today is to be bullish, which the market is clearly showing me that it is bullish, indicated by the order flow on all time frames, then it should deliver Friday daily high. It absolutely should deliver Friday daily high. So why would I not target that level? So as the market is showing me lots of signs of strength, what do? I move my take profit up to Friday daily high. I even think to just target a gap fill at previous day settlement at 23,609, and that would have hit too. And I would have been in and out, 90 handles in under an hour on that runner. Instead, I boost it, sit here, micromanage the trade, trail my stops at this low, comes back, gets knocked out, and then it delivers. So I think the main thing that I'm just going to do in the future is just fucking set and forget about it. Just set it. Goodbye. If it breaks even, cool. If it doesn't, even better. Because I have confidence that the market's going to deliver these levels that I'm looking for in my pre-market plan over and over and over and over again. Because I put in the reps, I put in the hours, I put in the experience to know that this is what it should do with a high degree of probability. So I'm just following through with that, and that's it. This is my model. This is what I'm looking for. This is how I execute the trade. This is what I risk. This is how I do this. This is how I do that. Everything I do is extremely systemized. It's a protocol that I'm following. It's a process that I can repeat every single trading day. And that's how I know that I'm going to achieve long-term consistency in the financial market, as I say in the intro to every single video. Now, eventually, or right now, I'm getting to a point where I'm extremely confident that I can come here and repeat this process, because it's the same thing. It's the same things that I look for. It's the same things that happen over and over and over again. It's the same targets I keep getting hit. It's the same amount of risk that I should be risking. So it's just a matter of time at this point. It's just a matter of time for me to keep showing up and keep, if the market does this, and I'm going to do that. That's it. Manage risk. So, the first 2 days of the eval, a little under break even, whatever. I know that I'm going to pass this eval 100%. Like, I've got it. I've got this shit at the back. That's it. That's it. What else is there to say? What do you think that I did wrong? Should I have sat here and micromanaged the trade, or should I sat and forget about it and just let the market do its thing and just keep working? Or should I have just taken off at the first objective that I was looking for and not had gotten greedy? What should I have done? Let me know. Let me know. I think that's going to be it for this. I don't know what we had right here. This is on earnings or something. But yeah, it's going to be it for this one. If you're subscribed to my channel and you continue to support me, I appreciate you. Those of you guys in the comments, I keep leaving support and seeing the potential it'll have within me. I really appreciate that. So, talk to you tomorrow.